Well, it's the last trading day of November. Hope everyone has been doing well. Market's been a little bit of a chop. That's one of the reasons that I like to use combination strategies, actually, to be able to control the Greeks a little bit better than singular type strategy positions. So let's go ahead and get started and jump into it and see why are we here and what is this all about here today. Well, we're going to talk about combination strategies of options. And basically, what that means is utilizing different tactics at the same time within a strategy. So combining what you would normally call a strategy, like a condor or a butterfly or a calendar. Some people call those strategies. I call those tactics, but combining those together so that you can control your Greeks and you can also have an easier time of adjustments. So what's this class all about? Okay, well, let's take a look at it. Today's class is free. I'm going to give you some good free information today that'll help you out naturally, and I want to tell you about the class that starts Tuesday. It's a 4-week class. The cost is $397. The class is going to meet Tuesdays and Fridays. So we're going to meet Tuesdays at 2 o'clock Eastern Time and Fridays at 4 o'clock Eastern Time. The class dates are December 4th, 7th, 11th, 14th, 18th, 21st, and 28th. It's a mouthful. The 28th is like the wrap-up day. Probably be a 2-hour session or something. All the classes are going to be recorded, so you get to download them and keep them for reference and whatever. As part of this, I'm going to offer a big-time bonus. And that bonus is actually, during the class, you're going to get access to our options trading room. So you're going to get a free month subscription to the options trading room, which the normal price for that's $397. So you're kind of getting a 2-for-1 special here. The reason that the options trading room is going to go along good with the class is because you're going to be able to see the trades in action. So everything that I'm teaching, you'll be able to see live because we do trade live. I trade live accounts in the options trading room. Let me pause for a second and just make sure that everybody can hear me. Can you guys type in the chat? Hopefully you know how to use the chat. Just a chat box. It should be up to the right. Just somebody type in and let me know if you can hear me okay, please. Okay, great. Thanks, guys. Okay, so let's move on here. Now, some of you people may know me, some of you don't. Most of you probably don't. I tend to keep a low profile. So, I would be asking myself the question, hey, why should I listen to you? Why, are you sure you can teach me anything? Who are you? Well, I'm a full-time professional options trader. I trade, for my own accounts. I also trade some of other people's money under managed accounts as well, but mostly it's mine. I'm a retail trader. That means I trade from my office or my house or wherever I'm at, just like you guys. I use Interactive Brokers as a platform. I use OptionView software. I don't have any special edge, inside knowledge, or anything like that. So I've never been a market maker or a broker, just a retail trader. I've traded options for about 15 years, and I've been full-time trading options since 2005. Prior to 2005, I owned a mortgage company. We made funded mortgage loans. You guys are probably all familiar with that. I owned a mortgage company for 22 years and hedged our mortgage pipeline in the markets. Been featured in Stocks and Commodities magazine. Been a guest presenter on a lot of educational webinars with other trainers and teachers. As I mentioned, I trade my own accounts and I manage some money for others. So in other words, I've been around for a while. I've seen good times, hard times, easy markets, tough markets, traded a wide array of instruments and have sort of settled in on some strategies and tactics that work consistently over a long period of time. And that's what we're going to talk about. Whoops. That's my house. Okay. That's not my house. You guys may see that. Have seen that before. Of course, that's the Disney World castle. Of course, we all have dreams, right? So, you know, that's one thing that options trading can help us with, whatever those dreams may be. Of course, you know, it may not fund you to have a castle here, but it can do a lot of different things for you in terms of freedom and so forth, which you guys are probably interested in. That's probably why you want to learn to trade options. All right. Let's jump into the actual teaching here. Yeah, the beast's house. Yeah. Well, you know, it'd be nice to have a castle like that. You get a whole bunch of option traders. It could be like an office in there. Okay, combination strategies. What are they? What do you mean, Tony? What's that all about? Well, combination strategies basically are how to combine option strategies for maximum control. Maximum control and easy adjustments. That's a byproduct of combination strategies, is the easy adjustments. And I'll get to that and show you why that is. But, you know, maximum control is something that we're all interested in when it comes to trading options, right? All right. Here's what we're going to talk about in this course. And we're going to talk about this in detail, obviously, because, you know, it spreads over 4 weeks. It's, you know, eight hours of classes. And we're going to talk about what is a combination strategy, the difference between a strategy and a tactic. I'll give you a hint on that. A strategy would be, I want to make money based upon positive theta or time decay, and I think the market's going to stay within a certain range for a certain period of time. That's sort of a strategy. Then there's tactics. You know, okay, well, you know, what are we going to do to benefit from that? How are we going to structure our trade? Those are the tactics that we use. We're going to talk about problems with singular strategies like an iron condor by itself, or an out-of-the-money butterfly, or a broken wing butterfly. We're going to talk about the problems that you can encounter with those singular strategies. Most of you guys are probably familiar with the problems you can encounter, but we're going to uncover some hidden problems also. We're going to talk about iron condors versus combos. We're going to talk about butterflies versus combos, calendars versus combos. We're going to talk about combinations of debit spreads and condors. I'm going to show you some of that today, actually. Combinations of butterflies and verticals, combinations of butterflies, credit spreads, and calendars. Now, that's a mouthful, but you'll see that oftentimes, most of the time, when I have combinations like that, they're all centered at the same strikes. Instead of stepping over each other, they're all concentrated in the same strikes for easy adjustments. Combinations of ratio spreads, debit spreads, and calendars. Okay. Now, we're also going to talk about controlling the Greeks. And you know, basically, that really is the goal of combination strategies. Combining these tactics together really is all about controlling the Greeks. And when I say controlling the Greeks, I mean being able to utilize, being able to structure the Greeks in any relationship to each other that you want. So if you want to get rid of volatility, take it out of the equation, there's ways to do that. What I try to do when I'm trading for positive theta is I just want to isolate theta as much as possible and have else offset each other so that I'm earning theta every day and it's not being taken away from me through a decrease or increase in volatility and or delta movement. So we're also going to talk about consolidation of strikes, which I mentioned before, and why I think that's important. And we're going to talk about the proper sequence for entering and exiting multi-leg combinations. Because believe it or not, there is a proper sequence to it. And we'll get into that as well. Now, in this course, we're not going to talk about just theory. And we're not going to just be back testing strategies and do hypothetical trades. No. No, no. We're not going to do that. A lot of classes, that's what they do. They go back and say, well, let's see how this particular style of trading a butterfly would have performed, 2 years ago. Well, we're going to do some of that, but basically I'm going to be teaching by example with live trades. So what we're going to be looking at during this course is we're going to be looking at my actual live trades that I'm trading in front of eyeballs on our options trading room. It's real money. It's live trades. It's not with the benefit of hindsight. None of that. And yes, we're going to examine combination strategies in various market conditions. So what that means is we are going to go back in time and look and see how our combination strategies held up. We're not going to do it with the benefit of hindsight. We're going to do it just like we were trading going forward. And yeah, we all screw up occasionally. So yes, we're going to discuss what to do when things go wrong, i.e. when we screw up, when we make a mistake, or we do something, against what we thought we knew we should have done. I mean, we all do that from time to time because we're all human, and we do have losses from time to time, and we try to learn from that. So we're going to look into those situations in detail as well. Okay, now, before I get started on showing you this screen right here, I am going to go over here for just a second, and I'm going to show you something. I'm going to go to our website. I want to show you guys what I'm getting ready to show you. I want you to see that the trades I'm getting ready to show you are not with the benefit of hindsight. These are actual trades that we did live in our trading room, and I'm going to show it to you right now before we get started because I don't want there to be any misunderstanding that you think that I've put trades together to make myself look good in hindsight, because we don't do that. So give me just 1 second here. On my other screen, I am logging in, and I'm going to pull this over here so you can see it. All right, this is the members area of our website. I'm going to go to the PM section, which is the PM accounts. Now, this is where we put all of every day we put what happened in the market. We put snapshots of our positions. I'm going to go down here. This is the trade I'm going to show you guys. It started out back here in September, right here on the 24th, okay? You see that if you just look here, like for instance, this is a graph. These are thumbnails. I'll click on it in a second. We added this on the 24th of September, at 13:51 in the afternoon. Okay, click on that. You'll see that it expands. You might not be able to see it so good. My screen is kind of blown up here. You'll be able to see that that's a picture of the graph. Let me go back. Okay, so what I'm going to do is I'm going to show you this trade that we did. It started out on the 24th. These are all the snapshots of it that we put every time we made adjustments and everything on the site. So you'll see that it's legit, it's live, that we did. I'll also show you this. Okay, if you go to our library, this is where we keep all of our recordings. See all these for the options trading room? You hit this, you can download it. The trade that I'm going to show you started September 24th. Where is it? Right here. So these are recordings. All of these are recordings of the classes, okay? Okay, let me remove that. Let's get back over here. Okay, so in other words, I don't want you to, this was a live trade that we did, in the markets live. So I want to show you how combination strategies, how they work and give you just a general idea of some guidelines to employ while you're doing that. Okay, this trade started out on September the 24th, and it consisted of a ratio spread and a calendar spread. And this is in the NASDAQ, and this is in our PM account, our portfolio margin account. You'll see that what we have here is basically we've got a ratio spread. We're long 10 puts, and we're short 30, which is actually 28 because we have a calendar here, a two-lot calendar in conjunction with it. So we've got a ratio spread and a calendar to start with. And the position looked like this to start. Here's where we are that day, right on that black dot. So this was our position to start out. Basically, I was thinking that the market was going to go down. I didn't know how fast. I thought that perhaps it would just slowly, stair-step its way down. So I wanted to find the market down in this area, close to expiration. And if the market rallied, I was going to add to the calls up here to beef up this line, as you'll see going forward. So that's what happened to start with. Here's the price chart on the 24th. Here's where we were in the NASDAQ right there on that little red bar. All right. September 25th, nothing happened. We're still the same, except the market took a big nosedive. So we got into a little bit of debit in our trade. We were down $2,100 after the first day. Well, on the second day, I should say after the second day. So we went down really hard, and look at what happened to our Vega. Our Vega went up to minus 1,700. Okay, now we're going to control this in the next couple of slides here that I'm going to show you. But you will notice that one thing, that our delta and our theta ratio is really good. So I'll go ahead and give you a clue about how I like to have delta theta. I like my delta theta to be at 10% or less, and that's optimal. I like theta Vega to be 1-to-1, but you see that it's not. Vega's 2-to-1 to theta right here. So that's what was the cause of our loss that day. But still, here we are. We're still a long way from any sort of trouble. So we're not that concerned about it. There's what happened in the market the day after we put our trade on. All right. Here comes our first adjustment. And the reason we made this adjustment was to try to get in position here to start controlling our Vega. We're down another 22 points that day, and you'll see what I did. I removed the calendar in favor of putting 10 puts here. So now we have a debit spread and a ratio spread. So we got rid of the calendar in favor of a ratio spread here. And here's what our Greeks look like. Now we're short delta. We're shorter delta. We were long delta. So now we're short delta. Our theta has gone up to 1,000, so we're at 10, right? Delta theta is at 10%, so delta's 10% of theta, almost, a little bit more. But we've got a big, big Vega, right? Something to watch out for. Here we are. We're coming down into this area. That's why the Vega is increasing. And here's where the price is, right there. Okay. Now, second adjustment comes along on September the 28th. Nothing happened on the 27th. It was kind of sideways. Okay, so we're down another 23 points. We add our second adjustment, which is basically we just bought some long puts. So we still have a debit spread and a ratio spread. Now look at our Greeks. Our delta is 18, our theta is 517, and our Vega is 970. So we're whittling down this Vega to get close to 1-to-1 with theta. Our delta theta ratio is still good, but it looked like here. Oh, in the meantime, I should have said the day prior to that, the market did go up. You'll see on this chart right here. that bar right before the red bar. So that was the day before we made the adjustment. So we did get a relief rally. The green area is our profit zone based upon our position. By the way, if there's any questions, Tony, this is an example of forward testing. Check the date. Where's the date? What date? Sorry, Michael, I'm not sure what you mean. Check the date. Okay. So anyway, here we are on the 28th. That's what the price chart looked like. All right, now, moving on forward, we go on into the third adjustment. Now, this might look complicated. This might look complicated, but it's really not. What we did was we added a call calendar up here, and we did a split strike down here and added a credit spread. So what we did was we moved part of the debit spread up, we moved part of the ratio spread up, and we added 7 long puts. So basically, we've got a debit spread, a credit spread, and a calendar with a split strike. I'm not particularly a fan of the split strike, but we had to do that in this particular case. Michael says, on this chart with screen capture of option chains. Screen capture of option chains. Just a second. He says October the 2nd. Do I have the date wrong here? Is that what you're telling me when I typed it in? Maybe I do. Oh, the year. Oh, oh, okay, I got you. Yeah, transpose. Yeah, okay. You're right. It's 2102. Yeah, this is an That's funny. This is an example of way forward testing. Yeah, it's 2012. Thanks for pointing that out, man. I didn't even see that, and I've looked at that date like all afternoon, and it never even dawned on me. Okay, well, the important thing is it's October the 3rd. Thanks. You see, we all make mistakes. Okay, well, anyway, let's see what we have here. The market was up 19, 20 points. Okay, now look at what we have. We've got Delta at minus 27, Theta at 381, and Vega at 519. So our Theta Vega is getting really, really close to 1-to-1, right? And we're about at break even on the trade. So what we're doing is we're just making adjustments utilizing these different combinations to keep these Greeks in line. Now look at the chart. Okay, looks a little strange, right? Maybe different than what you might be used to. Well, I don't want to give up my profit zone, and I don't want to just start rolling things up. So I add combinations to take care of the problem. What's the problem right here? The market's going up again. See, looks like that. So here's our profit zone again. So we're still well within it, but we're controlling our Greeks. October the 5th, nothing doing. Market's down 17. Well, we're gaining a little bit of profit. So everything's still the same. I want you to look at our Greeks down here. They're still good. Our delta is 10% of theta. Our vega is just, slightly more than theta. So we're controlling that. So that basically what I'm doing is I'm trying to eliminate vega from the equation. That's what's happening here. So we look like this. By the way, in case you guys aren't familiar with this software. The solid line is at expiration. I keep clicking on it, sorry. The solid line is at expiration. All these dashed lines are the different dates before expiration. You probably know that. And there's our numbers down here too. So the price wand right here is where the price is. All right, let's go see what happened. Okay, so we're starting to go back down again. We're still in our profit zone up there. October 8th, same position. Nothing doing. We're just gaining down here from our theta. Now, something important happened this day as we went down. Now you'll notice if you look at our Greeks down here where my mouse is, I did it again, sorry. If you look down here, you'll see that theta and vega have now reversed. So now we're longer theta than vega. So now we've really taken vega out of the equation for the most part, which is what we want to do. Our position looks like this. We're starting to head back down. Now, of course, the current price or the current profit is right at what the expiration profit would be if we left this position like this, which we're not going to. And you see here's our step through dates. So you can see we're a little bit below where we should have been, but that's because of the volatility increase that happened over the last couple of days while we were longer vega. And here comes the market back down. Okay, October 9th, still haven't changed our position. Now take a look at this. We're down heavy, down 44. Now, usually when you're heading south like that in a hurry, down 60 points in 2 days, usually that's going to affect your position, right? Well, the reason that we want to use combination strategies is so that it doesn't affect us negatively. So we can control these Greeks. Look at how we're controlling vega as the market in the NASDAQ went down 44. It's probably down more than that. These are closing prices. Look at our delta. It's 80. Our theta is 1200, and our vega is only minus 200, 198. Combinations can control these Greeks. Here we are, right inside of our profit zone, a big profit zone, should I say. And we've isolated theta. We've isolated theta. We've gotten rid of vega. Well, the negative impact. Yeah, that's what you call leaps. Yeah, the 2102. Okay, so here we are. And this is what the market did that day. So, it's in a pretty good chop. So since we started this trade, we started up in here. We went down hard, up, 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 and back down hard. And it hasn't really affected us except for the first day or two. Here we go again, October 11th. Nothing done. Position is still the same. Down a little bit more. Our vega is starting to kick up because I think that, I think there was a couple of days in between there. But still, we've isolated theta pretty good. Theta is now 1800. Look at delta. It's like, I'd consider that pretty much zero against theta of 1800. And vega is 1/3 of theta. So we've taken the negative impact of a falling market of vega, out of our way. So what are we doing here? We're gaining money because we're isolating theta. This particular trade, there wasn't a whole lot of adjustments, but in the course we're going to go through. There'll be things where we're going to do more adjusting. But let's go see where we are. There we are, right there in the middle of this profit zone. Pretty nice. But we don't want to hang on to all this up here either, do we? So let's see what we do. Market's still going down. And here's our green profit zone up here. All right. Now we go to our fourth adjustment of this trade. This is October the 15th. What we did was we removed 5 of the debit spreads right here. Remember, we had 8. We're up 19. Let's go back. Okay, remember this is what we had on our debit spread. 8, long 8, and short 5. So we're going to take out that short 5, and we're going to take out 3 of those long 8s. See? Why did we do that? Well, to continue to control our Greeks, because the market was heading back up. And if you'll remember, let's go back. We're down here in our big zone, right? But the market starts heading back up towards here. But I don't want to leave expiration way down in here. I want to start building this up in case we rally. So here's what we're doing. We knock out some of that, and we start to look like this. Whereas before, remember, it went down really low. So talk about easy adjustments. I mean, how easy is that, right? All we did was sold a credit spread to take care of part of our debit spread. That's one of the, that's kind of, and I'm alluding to easy adjustments. Instead of moving like all these big contracts, you know, your larger size, you don't want to be moving those around all over the place because you're going to suffer slippage. So the less, you know, the more you can keep your strikes consolidated and leave them there, the better off you're going to be. So I like to use the debit spreads and things as the adjustments in the calendars because they're generally of smaller size and they're very effective. So we removed 5 of those and we look like this now. We still have a, you know, major opportunity to wind up down in here. But hey, if we don't, let's say the market just rallies on up. Well, you know, we're still going to do okay on our trade right here on a $125,000 account. You know, it's still almost, you know, 8-9% on total equity. But we're not done yet. There's the market kind of stabilizing over here on that red bar. Okay. The next day, look what happened. Look up here. The NASDAQ went up 57 points. I'd say that's a scaldy dog rally. If I remember correctly, I think it was up about 65 total. Before I move on, let's go back. Okay, now, here's where we were the day before. Now, if we go up, you know, 50-something points, where are we at? We're at 40. You know, we're going to be up in this area. Naturally, I was hoping the market would go down in here. Didn't do it that day. So watch what we did. I've skipped the chart there real quick. We removed 3 of the debit spreads. So now we don't have, you know, that debit spread anymore. And I actually took out 1 extra short right here for margin control because we're getting close to expiration. Look, we got 3 days. And in a portfolio margin account, you have to, it's all about margin control also. So I had to take out buy an extra one of these, you know, 90-cent puts here. So we took that out. So now look at our Delta, Theta, Vega. We're really, really long Vega, okay, against our Theta. So you may be thinking, Tony, look at that. That looks like crap. Your Theta is $193, and your Vega is $1,200. Well, if we didn't have days to expiration, that would be a big problem. But since we have 3 days to expiration, I want it like that because I want the market to go down, back down in here. So we're hanging on just to see if the market is going to accommodate us and maybe give us a little bit of extra But notice how we've brought all this, throughout this trade. Remember how all of this structure, it went straight down really low, and then it went up in the calendar. But notice how we've managed to just continue as it went up and down to control our Greeks and move the expiration lines up, 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 but still give ourselves an opportunity to wind up in one of these umbrellas. That's what it's all about. Look at the big move back up into there. Next day, we decided to hang on for one more day. We're getting close to expiration. I don't take short options into expiration, usually, unless they're just way, 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 way out of the money. And I mean way out of the money. So here we are on the 17th, and we look like that. So, you can see we still have a little bit to go. Sorry. It's possible we could find ourselves up in here. It's possible we could find ourselves up in here. So I'm willing to wait one more day, but I'm not going to go into expiration Friday. All right, 18th. Day before expiration. Well, this is actually expiration day. It's Thursday. You'll notice that what I did was I closed all the long calls and puts. So I had some long calls out here. Well, they were in November on this calendar. You want to get rid of those. You don't want to take those into Friday's settlement, because these are going to, be nothing, and then you're going to be left with, hanging out here with a bunch of long calls. So basically, this is how we wound up at the end of our position. And then later that day, I closed out. I bought those 5. I did it again. I bought those 5 calls and I bought those 19 puts. Even though it looked like they're going to expire worthless, I don't take them into expiration. It's not worth it. So I covered that, and we looked like that right before I closed those things out. So we wound up as a condor. Now I'm going to pause for a second and answer some questions, because I went through that pretty quick, because I don't want you guys to get bored. I don't want to sit around and repeat myself and things like that. What I wanted to do was show you, and this was a real live trade. I showed it to you on our website. It was a real live trade, and that's the way we trade with combination strategies. You get a lot more control, and you get some easier adjustments. You don't have to move. Say you've got an iron butterfly, and you're trading just that. Well, oftentimes the tactics are, well, if the market moves up or down a certain amount, we're going to add another iron condor. Now all of a sudden you've got all these different strikes up and down. It gets confusing, and you're suffering a lot of slippage every time you do that. I like to consolidate my strikes. I like to combine the tactics, and then use those combinations as the gearing, as the control for the Greeks. Ken says, Tony, is portfolio margin required for these combo strategies? No, not at all. In our options trading room, I run 2 accounts. One is portfolio margin, and one is Reg T. We do the same thing in our Reg T accounts. I just showed you the portfolio margin one just because. But no, we have a Reg T as well. Reg T is a little bit different, because in a Reg T account we don't do naked ratio spreads or naked calls or puts. Basically, everything's covered. But it's very, 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 very similar. So no, you don't have to have a PM account for combination strategies at all. In fact, I think we have some people that are subscribers to our options trading room that are with us today. Maybe they can vouch for that in the chat. Hold on a minute. I missed it. Okay. Polo says, Tom, well, okay, it's Tony, but yeah, would you buy a far out of the money put unit as an insurance against black swan events? What would be your criteria to do so? Okay. I get that kind of question all the time. Let me back up a bit here. I don't know how to back up like 5 at a time. Okay, let's just go here, for instance. I don't have the weeklies. I was going to show you the weeklies. Well, I have to go back too far. Let me just answer the question. No. Units, way out of the money put units, you have to get a massive, they would have to get in the money to even, really work their magic. What you can do is you can utilize the weekly options. They're closer to the money. You don't need as many. They have a short lifespan, sure, but they are insurance. Typically, what I do is I like to, let's look at this graph, for instance. Well, let's just move forward. Okay. From right where the price is, I like to have my positions as wide as possible. I mean, I want to be covered for at least 2 standard deviations if I can get it. There's no real good way to protect yourself against a massive drop in the market when the markets are closed, except for to hedge yourself with futures if it's happening. If you see it happening during the day, when you start to make big moves, it's best to step aside. And I'll tell you, when you have combo strategies, it's easier to step aside and it's easier to hedge than if you've got, 3 or 4 butterflies and a double calendar. If you have these singular strategies that are, where you've added, 2 or 3 butterflies, or if you've got an iron condor by itself, you could be in deep trouble. So the short answer is no. The way out of the money units are very difficult to to handle. But you could certainly do that, and just cost out that as insurance along the way with each trade. Why was gamma so small just before expiration? Well, here's why. You'll notice that my expiration line is very, very flat. Let me go back. Sorry. Let me. It's a good question. Gamma's like, 0. The reason is because my delta is not going to change up or down unless it goes a long way. See? Now, let's say that the price was right here, right inside of this calendar. Well, then my gamma would go up. Now, you guys, since you asked that question, you're probably familiar with, they call expiration week gamma week, because they say gamma really gets, increases. Well, yes, it does, unless you know how to control it. That's what combination strategies do. They help you control that so you can stay with it, so that during expiration week, when you're really, really racking in some theta on a wide position, you're not getting whacked with that gamma up and down. So in other words, your deltas aren't changing. If you have a very sharp peak here inside of a butterfly tent, man, the further you get up that peak, the more delta risk you've got and the higher your gamma. So delta's going to change exponentially up or down with small moves. I don't want that in my positions. So I like to eliminate it. That's a good question. Okay. Oh, here's a link right here that's been put in there if you guys want to order this course today, which I hope you do. Quite frankly, I'll tell you something. In our options trading room, during this course, should you follow along with our trades, you have a high likelihood of making more than the course cost you, although I cannot guarantee that, obviously. I cannot guarantee what the markets will do, and I cannot guarantee that I never have losses, because I do. But I can only think of one loss this year so far. And that was in our Reg T account in RUT 1 month. And it was my fault because I made a mistake. I did something I shouldn't have done. Had I not done that, we would have made money. Okay. Dr. John says, how much percentage bleed do you have from transaction costs during the course of your position? Transaction costs are hardly nothing. I mean, with Interactive Brokers, they charge me 80 cents a contract. So transaction costs are not very, very high. The thing that I'm more concerned about is slippage, you know, in the adjustments. That's another reason why I don't like to move around my big lot positions. I like to establish those and try to leave them there. Now, I will move them if I have to, but I like to make my adjustments with the smaller, more potent positions such as the debit spreads and calendars to try to suffer less slippage. And sometimes slippage is just a matter of knowing, you know, when to make the adjustments, when the market's, you know, relatively quiet, trying to, you know, be patient and get your price at the mid price. That's usually where I trade, is at the mid price. So not much bleed from transaction costs at all. They're negligible, really. Okay, just a second. Bill Stevens, Tony, can we access this webinar archived? I just had to take a call and missed out on a good portion of this trade. Yeah, Bill. Actually, we're recording it, and also before you guys stay till the end here because before I leave, I forgot to put the PDF of this PowerPoint into the webinar. So I will do that, and you can click on that, and you can download that PowerPoint also. But we're also going to email you guys a link where you can download this entire video and have it as well. I came late. Paul says I came late. Will the link to the recording be made available so I can see it from the beginning? Yes, it will be emailed to you. And if for some reason if somebody doesn't get it, feel free to email me, and I'll make sure you do get it. And like I mentioned, we'll have the PDF up here in a minute. You can download it. Okay, Sri says, do you have auto trade with IB? No. No, I make all my own decisions. I suppose, well, hold on, I suppose what you mean is auto trade with certain like parameters, and if they're met, then the trades automatically go. Is that what you mean, Sri? I think that's what you mean. No, I make all my own decisions, and I put my trades in manually like everybody else. Oh, that, yeah. I manage accounts with. I've got managed accounts with IB. Actually. So yes, the answer is yes. I manage other accounts with IB where the only access I have to those accounts is to make trades. I can't add money, take money out, or anything like that. Yeah, you give permission. I have to send you an invitation. If you'd like to discuss the managed accounts, I'd love to discuss it with you. You just send me your email address. Well, you have mine. It's Tony. Here's my email. If anybody wants to email, let me put this in here, okay? No, wait a minute. That's not it. What am I doing? Okay, that's my email address. It's tony@optionelements.com. Let me back up. I'm missing some questions. Okay, Scott. Sorry, Tony, I had to take care of the kids. I will look it over the weekend. Okay, yeah, great. Okay, hope you do, Scott. Thanks for being here. Mark says, how many days to expiration do you usually start your position? Now, that's a good question. Okay, that is a very, very good question. And I will tell you that I have no set time that I start. I'll tell you what I don't do I don't start greater than 40 days out, and I generally don't start greater than 35. I like to start inside of 30. However, I wait until conditions are right. So it's not uncommon for me to be out of the market for a week or 10 days sometimes. I'm not always in the market. Like, for instance, our current trades that we're into right now, I just started 2 days ago for the Dees expiration. So what's that? Was that 25 days out, I think? Yeah, it just depends. It depends on it depends on whether or not I can design the strategy correctly, whether or not the market is misbehaving, whether or not there's an election, stuff like that. So, Mark, yeah, to answer your question, I like to start inside of 30 days. But it could be 29, it could be 20. Just depends on market conditions. And, of course, we do have a weekly strategy we use, which, doesn't really matter because we trade it on Friday and close it on Tuesday. So, but that's a different thing altogether. Jeff Thompson, yeah, can I go over the course format again? Yeah, I'll be happy to do that. Just one second. Do you fear 1987 with naked eye? Well, yeah. But I don't usually. Here's the way it works with naked options. I will utilize them. They're going to be utilized when volatility is relatively low. I'm not going to utilize them when the market's heading straight down south and balls up at 40%. I'll utilize them, but here's the way I do it. I usually do it at the beginning of the trade, and I usually get those things covered within a few days, covered one way or the other. But also, let me say another thing. I'm a full-time trader, so I'm anytime I'm in the market, I'm at my desk. I've got access to the markets everywhere I go. So it's not like I'm not paying attention. So I try to be proactive in that area. But yeah, it is it's something you got to be careful with. It's not for everybody. Bill Stevens says, approximately how many hours a week does it take you to manage each trade? How many trades per month for income? I usually will have only 1 to 3 trades. Most of the time, I only have 2. Usually have 1 trade in the Reg T account and 1 trade in the portfolio margin account. Generally, PM accounts, I trade the NASDAQ, and the Reg T accounts, I trade the RUT. But I trade the NASDAQ too in the Reg T. And occasionally we'll get into some stocks, but very occasionally, not very often. So usually 1 to 3 tops. How many days a week does it take you to manage each trade? Well, it takes me a lot more time to manage the trades than it does take my subscribers, because my subscribers, that's why they have me, is so that I can sit here for 3 hours looking at potential adjustments. Some days like today, there wasn't anything to do. I did make an adjustment in the NASDAQ today, but only one. Some days it doesn't take hardly any time at all. Other times it takes a while, because the way that I operate is that I study every possible adjustment I can think of and compare it to each other before I decide on what I'm going to do. So I do spend time doing it. It does take time, but the subscribers with us, it does not take that much time. And if you go through the course, you'll be able to cut down on the amount of time you actually would have to spend making adjustments, because I'm going to give you a bunch of ways to do it. Of course, I'd probably spend less time if I wasn't full-time, but I spend the time, whatever time's necessary to do it. So hours a day, I don't know, 2, 3. 2 or 3 actually making decisions on things. Some days there's no decisions to be made. The times that I spend the most time is when we're getting ready to initiate trades. So before I initiate a trade, I spend quite a bit of time in the design phase of it. Most of my trades last about 15 to 20 days. Tony, how much you charge subscribers? We have two levels. In the options trading room, to follow the Reg T account, to follow the portfolio margin account, it's $397 a month, but you also get to follow the Reg T account with that. The Reg T only is $197. That brings me to something I forgot to tell you guys. We do things a little bit different than most people. Whenever we make adjustments or have adjustments outside of the trading room hours, the trading room's Monday, Wednesday, and Friday at 3 o'clock Eastern time, Monday, Wednesday, Friday. It usually lasts anywhere from 30, 45 minutes to an hour, depending on what we've got going on. Outside of those trading room hours, anytime I get ready to make an adjustment, before I do it, I send out an email and a text message. So all my subscribers get a text message on their phone that says, here's what I'm getting ready to do. And I give them the prices. And then they can also go to our website, because before I make an adjustment, I put a snapshot of the proposed adjustment, the matrix, and the graph on the website in the members area so they could go look at it just to confirm that they understand what I'm saying. And before I answer another question, I want to show you what that looks like. Okay. This right here, this is where the recordings are in our library. This is where all the pictures are. This is where our live sessions, you click in there to join the live sessions for the trading room. Let me go show you something. This is my admin, so it's going to look a little bit different on your, you guys, they don't usually see this, but sent messages. These are all the text messages that I've sent out, like today, okay? PM accounts only, NDX. Well, I made a price adjustment. Before that, I sent out PM accounts only, NDX, selling 1D 26.25, 25.75 put spread at 10.50. That was the adjustment I made today. Then you see Reg T only, selling 4D 7.90, 7.50 put credit spreads at 3.30. These are all the texts. These are adjustments. These are live. I mean, this is sent out before I do it. So you guys don't, I don't send it out an hour after. I send it out before. See all these as I scroll through here? That's what you get with our service. You're not left out there. We keep you informed so that you can, make those decisions just like me. I tell you exactly what's going on. And you get it via email and text message. So no matter where you are, you'll be able to get it right away, right at the time, that it's time to make adjustments. You guys can go to our website too and get more information on that. By the way, we're getting ready to flip the switch probably the very first of the week on our new website design. So it will look different the first of the week. It actually looks a whole lot better. We've made some serious improvements to it. Michael, do you maintain a specific delta to theta ratio with your trades? Yes, I do. Are you ever concerned with too much negative vega? Yeah. I'm concerned with negative vega, but that's why I try to control it. I'll give you some guidelines that I use. I like my delta to theta ratio to be at 10% or less. That's optimal. Usually when I start trades, like right now in our Reg T account in the RUT, our delta theta ratio is 30. So our delta is 30% of theta because we just started. Once it gets up to around 40, I'm making adjustments. But I try to drive it down and I try to control it with the combinations. And over time, that's what we do. We drive delta theta down to 10%, and we like to have vega to theta at 1-to-1. Yes, I get concerned with a bunch of negative vega, especially right now when volatility is at the lows or near the lows. But I don't mind being short vega as long as I'm short delta. And I've got enough theta and enough delta, enough short delta, that under normal conditions, a 1 to 1.5 standard deviation move on any day is going to be a net break even on the Greeks. In other words, I don't mind being short vega as long as I'm short enough delta and have enough theta to compensate for a 1.5 point rise in volatility that day. Because that's about the average, that you're going to get on a, 30-point move in the NASDAQ. But that's what combination strategies are all about. It's controlling that so it doesn't get away from you. How are you going to control it with an iron condor? There's only one way to do it, and that's to move your credit spreads up or down. And what happens when you do that? Two things. You lose a bunch of theta or a bunch of profit potential, and you suffer slippage, especially if you're trading any kind of size. So combo strategies are far superior than condors or butterflies, and I'll prove that in the class. Bill says, intraday one standard deviation move makes adjustments problematic, especially on intraday whipsaws. How do you deal with this? Tighter adjustment points? No. One of the things I try not to do is over adjust. I set my trades up so that they can withstand the daily one standard deviation move up and down without me having to do anything. I could go back and give you this, examples. This is later in the trade, of course, but I got 2 standard deviations up and down. I wish I knew how to get back to the beginning. Oh, look at that. I just figured it out. Here's the very beginning of that trade, Bill. Let me try to answer your question. The way I deal with it is I set it up like this is the beginning of the trade. And it looks like that. Okay, you can see that the market can go all the way to infinity, and I don't care. I'm still going to make a little bit of money. Look how far down, I have to go before I get into any sort of trouble. 27.50. And we're almost at 28.50, so that's about 100 points. So I don't put my short strikes close to the money. I don't do low probability type trades where, I suffer, from these whipsaw movements. No. I trade as a business. Okay, it's a business to me, and you know what? I don't want to have to get thrills out of it. In fact, I want it to be rather boring. That's the way I like it. I like it to be boring, and I like to be able to withstand market moves up and down without having to make very many adjustments. Okay, like this trade, this position I just showed you guys. I made 5 small adjustments to it over 17 days. And the 5th adjustment was basically just closing out. So really I made 4. Let's go down here to, let me move forward. I'll show you what happened in the market. Basically, look, I started way up here. The trade started up here. The market went down quite a bit, right away. Right away. I made one little adjustment during that move down. Then I made another adjustment as the market consolidated to start to go higher. Then I made another adjustment as it came down through here. And that was about it. So no, I don't. And same thing in the Russell, the same thing in the Reg T account. I try to set it up where I don't have to make adjustments. Occasionally, the market will move right away, right when you establish a position, and you're forced to make an adjustment. But I try not to overtrade it. And controlling the Greeks with the combinations is what allows me to do that. Now, with that said, when it's time to make an adjustment, I make an adjustment. I don't find excuses why I shouldn't. I just do it. That I've learned over many, many, many years. So just do it when it's time to do it. Let me go back to the beginning to go over the course criteria again, because I had a request for that. All right. This is what we're going to be going through. All these different things. We're going to talk about what's a combination strategy. I'm going to talk about the different types of combinations and why. Difference between strategies and tactics. I'm going to show you individual tactics within a strategy. Profiting from time decay of options is a strategy. Employing a calendar to do it is a tactic. I'm going to talk about problems with singular strategies. I'm going to talk about condors versus the combination strategies, butterflies versus a combination. In other words, I'm going to take condors and I'm going to show you how to add to the condor so that you have more control over it. I'm going to take a butterfly, add to it, show you how to have more control. Calendar, add to it, have more control. I'm going to show you combinations of debit spreads and condors, butterflies and verticals, combinations of flies, credit spreads and calendars, combinations of ratio spreads, debit spreads and calendars. I just showed you one of those inside of that trade. I didn't explain it in detail, but I showed it to you. I'm going to show you how to control these Greeks based on your outlook, if you have an outlook for volatility and or the price of the underlying. I'm going to show you how to be able to lean one way or the other, or isolate any one of the Greeks you want to, or eliminate any one of the Greeks you want to. I'm going to talk about the importance of consolidating strikes. I'm going to show you how to do that and why it's important and why that gives you more control and easier adjustments. And I'm going to talk about proper sequencing for entering the trades, and more stuff that goes along with it. A little bit of the psychology, know thyself, that kind of thing. But really it's going to be hands-on, live trades. I'm going to show you what I'm doing. You're going to see it in the trading room. We're going to talk about it outside the trading room in the class in detail, and you're going to see it in action. So it's not just back testing. It's not theory. It's not stuff that happened in the past. Although we are going to do some back tests, I'm going to go back in time, like I mentioned. You have to show certain things, different types of markets, but you're going to see it going forward. Yeah, Polo, were you going to ask me something? All I got was, there we go. Tony, what's the recommended minimum account to perform these combination trades at Reg T? I think that the minimum account size really should be about $25,000. I think that once you get underneath $20,000, you can certainly trade with, say, 20. But what happens is that you're not going to have a whole lot of flexibility on your adjustments, because you're not going to be able to have multiple numbers of contracts. In other words, you'll be trading maybe 2 lot contracts instead of, say, 4 or 5. So you'll be limited a little bit on your adjustments. But 25, I would, I'd be remiss if I didn't say that I think that 25 is really the minimum that you should have to give you the highest probabilities of success. Our Reg T account I trade is 50,000, and the portfolio margin account is 125,000. Hang on a second, guys. Getting a dry throat here. I've been talking so much. Okay. All right. Let me do this. A couple things before I go. I'm going to go load this PDF file for you guys, so you guys can download it. If there's any questions you guys have further, about all this stuff, feel free to email me. We do answer the emails. Whether or not you join the class, I'll be happy to answer your emails. I hope you guys do join the class. I put a lot of work into it. I think that, I sent you guys our record, okay, our trading record. Basically, I gave you a sample over the last 5-6 months. Okay, those are all actual trades, and we're on course for 60% annualized return. Prior to 6 months ago, we didn't call our trading room the trading room. We just had individual types of teaching and classes, like Managing by the Greeks is what we called it, where we did live trades too. You'll have access to those as well as far as the recordings go. So we've done fairly well, and we hope to continue that way. Yes, this is recorded. And we're going to link to it after we process it. We'll send you the link, and you can download it and keep it for forever. Okay, let me see how. If you guys will give me just 1 second, I'm going to go ahead and load this PDF for you guys so you can have it before we, and then I'll come back and I'll answer more questions if you guys want me to. So let me stop sharing my screen for just a minute. I'm not going anywhere, but just give me a second to get this PDF up for you. All right. So there's our, our website, optionelements.com. Want to thank everybody for joining us. Not going to keep you guys forever. Yeah, basically, anybody that orders the class, we'll get you set up in the options trading room access manually. So, after you order, just wait a few minutes or an hour or so, and we'll get you the login information. And you know what? You can download. We've got all those recorded videos in there of all our. Okay, let me see if let me answer some questions. I'll stick around, for another, 30 minutes if you guys want me to. I don't want to repeat myself for those of you who are up to speed. I do wish that you guys would join us. At least, come see what we have to offer. It's different than any other service. I've been around. I've been in, I've taken classes and courses and everything over the years. And I think that you'll find that I'm one of the very, very few people that actually trade live and put my money where the mouth is, so to speak. I think you'll really enjoy it. Conrad says, if I sign up for the PM margin trading room, do I get access to the small course? Yeah. Mm-hmm. Yeah, you get access. Anybody that signs up for the PM account, you get access to the Reg T account also. So you'll get you'll be able to see all the, both the trades. And of course, I discuss them in the trading room. I discuss both of them, with everybody. But the biggest thing is that if you don't sign up for the PM account, you won't get the text messages. You won't get the live trade updates so you can act on it. You'll have to see it after the fact, which you don't want to do. But yeah, PM gets everything. Gets both PM and Reg T accounts and all trade updates live and everything like that. This class starts on Tuesday. I just started trades, but it's not too late. In the class that starts Tuesday, I'm going to actually start some new trades. They're going to be pretty much the trades that I've already started in our options trading room. I'm just going to modify them a bit because it's a little bit closer to expiration. So we will be trading live. and this will start Tuesday at, what time did I say? 2 o'clock. Yeah, all classes are archived for 24. Yeah, you go to the website, and they're all on there. I showed some screenshots of that earlier. It's inside of our library. They're all there. You can get them 24/7. You can download them to your computer, take them with you, whatever you like. In case you miss a class or, whatever, you can download it, most certainly. It's one of the benefits of modern technology. Okay, inside the chat, Carl has just posted where you can click a link and download the PDF of this presentation today. So I hope everybody does that. Copy that link, everybody. Copy it and go there, and you can download the presentation. Okay. Thanks, Polo. Yeah, I enjoyed giving this presentation. It's just it's a glimpse into what we're going to be doing. I think it's the price is fair. I think you're going to get way more than what you're paying for, especially with the trading room access. It's unique. It really is, and you'll be able to see it for yourself. Also, naturally, if you're not satisfied, obviously we're not going to give you a hard time if you want a refund. We don't do that either. So we want as many people to join our community as possible. So I do appreciate all you guys taking time out of your Friday night to come in here with us. I will stay here until the questions run out. I'm not going to really go over any of the slides again because I don't want to keep you guys too long. But I'll stay here until the questions run out, and then I'll cut the recording off, and it'll be available. We'll send you a link to it probably sometime tomorrow. JJ says, Tony, what time is the Monday trading room? Monday is at 3 o'clock Eastern time. We do it 3 days a week, Monday, Wednesday, and Friday every week at 3 o'clock Eastern time. And of course, that's recorded too. So our subscribers, if you can't make it, all you got to do is download it and see what happened. Of course, you'll know if we made any trades because you get the text messages and emails about it. Yep, sure. Oh, good. Hey, thanks, JJ. Glad. Okay, JJ just joined us. Thank you very much. It's at 3 o'clock, 3 o'clock Monday. Be sure and download some of those videos. You can see, kind of get up, see what we're up to right now. See the current trades we've just started. Okay, any more questions, guys, about combination strategies or our service or anything? Conrad, I'm interested in learning why you chose to do certain adjustments. Do you go over why you do certain adjustments instead of just, yeah, that's what the trading room is all about. We discuss it. And I talk about, my thought process behind it, the adjustment, selection, why. I go over, I show the different potential adjustments and which one I'm going to settle on. And yeah, I go through the whole reasoning process of it. Because I want everyone to understand, and eventually just be able to do this on your own, if you like. So yeah, I go into a lot of detail on it. I don't just send out, an email saying, I'm buying this and selling that. In fact, I usually try to talk about it ahead of time. Like today, I talked about potential adjustments for Monday if the market does this or it does that. I sort of broadcast, what my intentions would be in case we had to make an adjustment Monday morning before the trading room or something. So people have an idea. Plus, like I said, on our website, you go and I post pictures, slides like this. I post it doesn't have all this writing, but I show let me find one where I had, it's farther back, but I show what the potential proposed adjustment would be by putting the appropriate, numbers of contracts in the trade column. and there's pictures just like this on the website. So you look at it and you go, oh, okay, that's, I thought that's what he meant, but now I'm sure. It's a helper, Kevin Shea, is a trading room in a webinar? Yes. Yeah, you log in, you go to our website, you have a members area, you go to live sessions, and all you do is click on the meeting where it says join now. You can join up to 15 minutes beforehand, and it's in WebEx, just like this, and they're all recorded. Yeah, so it's just like WebEx where you can, we answer questions. Plus, I promote people where they can actually talk. Like, it's not just all done through chat. If somebody wants to talk about something, you get promoted as one of the presenters, and we sit there and talk where everybody can hear it, just like talking on the phone. Libor says, hi, Tony, I have a question. If you're trading RUT for Reg T, do you think it is replicable with IWM or is needed European tile? Okay. With IWM, I can start with lower capital for the number of options. Yes. Okay. You can certainly do that. Absolutely. Just keep in mind that with IWM, your strikes are going to be different, obviously, because of the scaling. So your strikes are going to be different, but you can design the strategy, probably very, very near the same. The fact that it's, as far as the expiration goes, we're not taking, options into expiration usually anyway, so it doesn't matter about the settlement procedure. Yeah, trying to learn how to fish. Yeah, well, that's right. We'll teach you how. In the trading room, are you using TOS? No, I don't use Thinkorswim. In the trading room, well, I show my broker platform quite often, which is Interactive Brokers. Okay, but that's really not of much importance because the backbone of all my decisions is this OptionView software that you see on my screen right now. This is where I spend the majority of my time in the trading room going over this. Now, if you use Thinkorswim, you're going to use analytics. Okay, but, probably 2/3 of our subscribers use Thinkorswim. And sometimes, like today, I showed my trading platform and made an adjustment on a spread. But, it doesn't matter. If you know how to use Thinkorswim, you just put your own spread orders in there. Doesn't really matter what broker you use, as long as the strikes and the numbers of contracts are in relation to each other, which brings me to a point. Some people in the Reg T account have more than 50, some have less. All you do is keep the ratios the same. So in other words, if I've got say I've got 10 butterflies and 10 credit spreads. Well, if you have half the amount, if you have 25,000, you make that 5 calendars and 5 credit spreads. And I go over that in the trading room also. So you don't have to have 50. You don't have to have the same amount of money because everybody has a different amount. So they just scale according to what their capitalization is. Walter, please say again, if one subscribes to the class, what parts of your website are accessible, such as your archive? Yeah, because you get access to the trading room. And inside the trading room, you have all the recorded videos. And you get the screenshots and you get the videos and, pretty much everything. Because I'm giving you a month and you also get the class as well. So yeah, pretty much all the areas of the website's available. Well, to sign up for the class starts Tuesday, this coming Tuesday at 2 o'clock Eastern time. So I'd say the deadline to sign up is probably about 1 o'clock on Tuesday in order to catch the first class. Bill says, any thoughts on best delta to Vega rate? Yeah, 10% or under. And I'm talking. Hold on. I'm talking about the major market indexes here. Okay. I'm not talking about stocks. It's different. We get into that, sometimes as well. But what I'm talking about is the index options. 10% delta theta. But look, I operate, plenty fine, a lot of times with a 20% delta theta. But if I can get it to 10 and keep it there, that's options trading nirvana. And that's what we try to do. And we often succeed with it. The option view you're using live data, it's live data. I have a live data subscription to it. You can get option view with 30-minute delayed quotes and save money. You can. But I use live data. And I don't use Interactive Brokers for any sort of analytics, by the way. I just use it as an order entry platform. It's just where, that's all I use it for. Kevin Shea, do you trade the RUT in Reg T as frequently as you trade the NDX? Yeah. Every month. Now the Reg T account, like the trade in the RUT in the Reg T account may last, a shorter amount of time, or it may last a longer amount of time. They sometimes I don't have a position in the PM account, but I have a position in the Reg T, and vice versa. Sometimes I'll have more than one trade in the RUT going at one time because I utilize their weeklies. We've got a little weekly strategy that we use that we're putting together. But yeah, I trade it very frequently. I mean, every month. It's an ongoing process. So yeah, I mean, basically, look, in the Reg T account, you get your money's worth, believe me. I mean, we trade it. I mean, we're in there trading it. Now, again, I'm not in the market, 31 days a month. I mean, if I can get in the market, make my 5%. Now, first of all, our goal is 5%. Sometimes we make a little less, sometimes we make more, and you know what? Sometimes we do lose. But our goal is 5%. Now, if I can do that in 15 days or 2 weeks, I'm happy to sit aside and, wait for another opportunity. So I'm not always in the market. Some trades take longer than others. Okay. You guys had a lot of good questions. I appreciate the interaction, actually. Bill, 5% on actual PM. Yes. Good point. I should have made that point myself. I calculate returns the old-fashioned way, or should I say, the real trader's way. What I do is I calculate our returns based upon the entire balance of the account, not just the amount of margin used. For instance, right now in the PM account, we're using about $40,000 in margin, but we have 125 in the account. So all of my returns are based upon the entire account balance. So when I say we made, 5% or 8% on the PM account, I'm talking about 8% of $125,000, not 8% of 40,000 or whatever the margin was. Same thing with the Reg T. I always calculate percentage returns based upon the entire account balance, whether we're using that money for margin or not. Now, a lot of people try to fool people. A lot of, people out there in the teaching community or whatever, they'll put on a butterfly that costs $12,000 in margin, and they'll say, maybe they make a couple thousand. They'll say, well, I made, 40%, 40% return. Well, you might have made that on the margin used, But if you've got $100,000 in your account and you made $4,000, you only made 4%. You didn't make 40%. So we don't play those kind of games. We go straight up with the entire balance. Yeah, that's the way to do it, all right. When making adjustment, what max percent of PM account value we use? Oh, I usually start out trades with, a half to 5/8, maybe 3/4 of the size I'm going to use. Never the whole wad, because I want to leave myself some room to increase the size of the trade if the market gives me that opportunity. But yeah, we'll go up to all of it. It's not uncommon for me to be utilizing, all the funds available, all the capital for the account in the positions. And if I have to make adjustments that are going to take me over the margin, then I'll just reduce some of the size when I make the adjustment to keep the margin down. So I try to stay at or under those maximum numbers of 50,000 for the Reg T and 125 for the PM. Reg T returns are based on max margin used. No. Reg T returns are based on the entire account balance, not maximum margin. Because let's say I make a trade and I only use throughout the trade, say it's a 2-week trade or 3-week trade. Let's say that the maximum I ever used was 35,000. I still calculate whatever the profit was or loss, because that does happen occasionally. Whatever the gain is, divide that by 50,000. That's the return, not maximum margin used. Total amount in the account. So like the percentage returns that I showed you guys in an email and you'll see on our site, those are based upon the percentage return of 100 on the capital in each one of those accounts, not just the margin used. Yeah, since we're trying for, trading for about 5% per month, I don't want to lose 2 months income on one trade. Yes, I've been down. There's, times when our trades, might get down 5%. But once I get, if it gets higher than that, like between 5 and say 10, then I know that I'm doing something wrong and my tactic is not correct. So I will close and reestablish under, a different strategy or tactic. So I take the hint. In other words, when things are working out and going smoothly, that means I'm trading correctly. When things are not, it means that I'm not trading the proper tactics for what the market is doing. And I try to, I don't let losses run. Not at all. So the target loss, I guess, you would say is between 5 and 10. If we get down that amount, then it's time to take a serious look at what the problem is with our strategy. In August 11, yeah. It's bumpy. But see, that's another reason. Let me just say, remember I indicated that I don't, put the entire position on at one time. That's because those kind of situations can happen. And then when vol does go up, you can put on a little bit more of your trade, a little bit more, and you can spread it out. And I'll tell you another thing, being positioned sort of correctly, sort of. I show you some examples of that too. Being positioned sort of correctly for stuff like that helps out a lot. And again, combination strategies help you out. They really do. I'm not just saying that, of course. They do. because that's the way I trade. And of course, look, there are times in the market when you do everything that you can and it's correct, but the market just makes a one-way movement, and eventually you run out of adjustments to make, especially as you get closer to expiration. And you know what? That happens. So, any decent trader, will know that 2 months out of the, at least, 2 of the months out of the year, you're not going to make money. You don't know when those months are going to be, but the big deal is to not lose a lot during that time period. Know when to hold them, know when to fold them, and know when to, be out of the market and not be jonesing, to jump right back in, to take revenge on the market. That's what trading as a business is all about. Hey, Walter. Walter says, how often do you employ a straight directional tactic, long call or long put? Not very often. Not very often. But I tell you, I will lean one way or the other. As you saw in this trade example, I was leaning short, but I wasn't leaning with just, say, straight directional. Because a long call, long put, basically you're betting on volatility and delta because you're losing theta all the time. But I can lean positions. If I'm biased one way or the other, I can certainly lean the position that way. So it will make, say, more money if I'm right, but I don't want to lose money if I'm wrong. Hence the combination strategies comes into play. Yeah, no problem. Okay, guys. Well, look, I guess, okay, do I use straddles? Yeah. Occasionally. I prefer a strangle. Long straddles, for instance, it's, how do I say this? They work really well if your timing's right and you get a big move. It can be done, but I would add something to it so that if the market did not go somewhere within a certain time period, that I wouldn't, lose a whole bunch of premium. I also employ, since we're talking directional, I also employ way out of the money debit spreads in the back months as sort of a lottery ticket, so to speak, in case of a big move in different instruments from time to time. Yeah, fiscal cliff volatility, yeah. Well, look at the chart of the RVX or the NDX or the VIX. Did I say NDX? Yeah, NDX or the VIX. We're near the lows, and low vol leads to high vol. It's coming. I just don't know when, and I don't know what's going to cause it. Could be the cliff. Don't know. That's why I want to have wide positions, and I want to have my strikes consolidated, and I want to be ready ahead of time so that when the market starts making moves, I'm not frustrated trying to figure out which strikes I need to move and, stepping on, strikes. And I'll explain that stepping on strikes term in our trading room, but I try to keep my strikes consolidated. They're easier to adjust. You don't get all messed up and have a tendency to make mistakes. Buy a spread when you meant to sell it, stuff like that. I've done that. It ain't fun. That brings me to one final thought for you guys before I go. Just advice from trading for a long time from somebody who has made mistakes in the market. We all do. If you make a mistake in your entry or an order or something, or if you do something that's a mistake that you didn't mean to do, like you buy when you meant to sell, or you do the wrong strikes, or you do the wrong months or whatever, don't incorporate it. Don't try to find a way to incorporate it into your trade. take your lump and close it and move on, because in those cases, your first loss is your best loss. Just a little bit of closing advice for what it's worth. It's free, so it might not be worth much. But anyway. Okay, guys. Well, listen, we've been going for an hour and 42 minutes. I don't want to repeat myself. I don't want to bore everybody. So listen, thanks, everybody, for being here. We'll send you a link to this recording. And you guys download the PDF. You can have it. Email me if you've got any questions. I hope that you decide to take advantage of this class. We'd really like to have you. Again, if you sign up and then you decide it's not for you, we're not going to give you a hard time. So, but thanks, guys, for being here this afternoon. And I'm going to go ahead and close it down, and hope you guys have a wonderful, wonderful weekend. Yeah, hey, Thomas. Okay, I'll see you guys later on.